Good morning, traders. It's 8:03 a.m. Chicago time on Thursday, St. Patrick's Day, the 17th of March, 2022. Thanks for joining me on episode number 2193. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning we have a mild risk off market here as the as participants take a breather on the rally that occurred yesterday and the day before. So we have mild risk off, mostly heaviest in Europe. Europe has been more volatile in its up and down swings lately for obvious reasons. Crude oil going for a tear, breaking up above 100 here, up 632 basis points. 632 basis points and pushing above the $100 mark. We see that across the metals, commodities. We see it, copper and so on and so forth. And that's something to be watched. We see that the bonds and the notes are slightly up this morning. The Bund is off. The Bank of England came in this morning and raised its interest rates by 25 basis points. And so the prior was 0.5%, raised to 0.75% on the rate out of the Bank of England. We got building permits this morning, came in line basically for February. Building permits at 1.859 million versus 1.85. Housing starts 1.769, higher than 1.69 million. Nice to see that inventory's rising. And we also got Philly Fed, which is a lower tier number. We got initial claims, and the initial claims came in relatively strong, 214,000 versus 220,000 expected. ECB Schnabel has spoken this morning, releasing comments about the Eurozone. And then in a few minutes, we get industrial production. Industrial production expecting 0.5% month on month. And then that opens up this evening to the inflation rate out of Japan and the BOJ interest rate decision. The expectation is for them to hold in line at negative 0.1%. So that's what's on deck. The big news, again, BOE raises 25 basis points. Of course, the Fed raised 25 basis points. It was a hawkish tone in the comments made by Jay Powell, and you could tell that the market had already priced this in and one of the comments he made is that he's not expecting a recession, which he has said before. But the market responded positively to that. I think really it's more about, okay, it's not worse than expected, so now we can more safely buy because there's one less risk factor that is out of the way now. And so we had that rally, which I found relatively difficult to trade, although the bottom was the key support in our stock zones at Convergent. But Russia-Ukraine stagnant. What's becoming starkly obvious is that the Russian propaganda machine, the Kremlin, is saying and doing things that really just make a bad situation worse, imposing sanctions on the U.S. president and so on. Also stating that that the U.S. shouldn't talk, given the World War II dropping of the atomic bomb on Hiroshima and Nagasaki, and just a lot of rhetoric. And unfortunately, that creates a situation where the market might believe that it is just it is becoming a desperate situation in a country and a regime that is quite authoritarian. So there's that risk overhang. But overall, the situation on the ground is brutal, and is stagnant. There's no real advance by the Russian military. There's allegedly indiscriminate bombings and shootings of people and things like that. Who knows? And then the other overhang is negative news out of China on COVID. There's a COVID outbreak that China is making strong moves to contain, which may have some contagion effects on the rest of the planet again. So we'll see how that works out. So those are the factors that are kind of playing in overall geopolitically, macro, and all that stuff. The euro dollar yield curve remains quite inverted and quite misshapen. It still has a very strong slope up in the short end of the curve and is inverted in the longer end of the curve. It is a completely unnatural shape in that I forget what the duration is, but I think it's 2 years. The interest rate is really high compared to the 5 year, 10 year, 20 year, 30 year, and so on. And that's in the yield curve. And so this tells us that participants are pricing in some risk that is not obvious and is not being talked about by the Fed currently. So that is creating a lot of tension in the repo market and in the underlying pricing of assets, commodities, and so forth. So we expect this volatility to continue because this is a very strong anomaly and it's kind of happening under the surface, and it's not often talked about. Strongly encourage you to listen to Jeff Snyder on Eurodollar University's podcast. Also Eric Townsend on Macro Voices. There are a lot of intelligent people talking about this, and it's stuff that I myself as a trader has been trading for 22 years, haven't really had that much exposure to, but I find fascinating. The S&P, we've traded 199,000 contracts. The inventory 61% short. 61% short. The volume has really come down, and so has the range. The range is still relatively high compared to our statistics, the overnight stats, but still 43 and a quarter is a far cry from the 90 or 100 points we've been getting lately. The point of control at 43, 42, 75. The market spent a fair amount of time at that key point of control. Key point of control at 43.34. This is a big number that we need to pay attention to. So the point of control is just above. The tilt in the overnight profile is bearish, although the profile itself is balanced. It's got a nice taper at the top and the bottom, and we are within yesterday's range. Let's take a look at. I'm not going to review yesterday. Everybody's got charts. I don't have much to comment on with regards to yesterday. I traded from the short side on the Fed announcement, which was the correct side to be on. Traded that into our key support, which was in the 42-41 area, and then lost money on the way up on the rally. Overall, I might as well, just being transparent with you, I traded it like a complete buffoon. I might as well have not traded at all and just relaxed and just saved my effort and done something productive with my time. But it seemed really obvious to me, the movement. On the short side, the rally back up was not something that I read very well. It was very it was a grindy and bursting. So here's a look at it. See, this is the sort of stuff that kind of so if we look at that little pullback zipper there and then burst, and then you have this pullback zipper and burst, pullback zipper and strong burst, very deep pullbacks, a burst, a consolidation, a zipper that continues with another burst. That's normal action. That's what's called, short term. It's called a very short term bull flag. It's a bullish thing, but the I'm trying to buy this thing on pullbacks, and it's going deeper than I'm expecting or my stop is. So I'm getting pushed out. I'm getting pushed out, and then it would burst. Like again, there's a burst. There's a burst. There's a burst. This is a 1 tick by 8 P&F chart. And then it got choppy here, and then we have another burst, and then it got choppy, and so on. I just was so out of the flow. I had a very first-hand experience of being completely out of the flow, and trying to go back and making an effort to go back to my process and go back to how I'm looking at trades. But I just couldn't get it together. So this was a net negative. This move here, which was huge, was a net negative for me. I mean, we moved about 120 points from the bottom, and I just pissed away plenty of ticks there. So just want to say that I'm not saying that to say anything other than this was nice. This was not so nice. And that's just how the Fed days are. It's a very touch and go kind of trade generally. So pretty good movement though. Heavy price discovery, really good taper on the low yesterday, and balance and the point of control kept shifting. We did end up breaking into the 43.50 area, which was the next key area up. And then since then, so you could see, let me clean this up. In fact, let's break it down to the profile. So you could see this is the most traded area. This is the most traded area on the profile, and it is the most valuable price zone going back since the all-time high. Again, in the March contract, which expires tomorrow, we're still in rollover. So I don't think I've ever made money trading the Fed during roll. I don't think I ever did well. The roll itself, expiration week, has always been garbage for me. At best, it may be a little bit up or flat. At worst, it's a blow up week. So generally, I don't like to trade. And those of you who are convergent have probably noticed that I'm not commenting too much. It's just tough for me to trade this week. But what we've done, the March contract had 43.43, which I mentioned, which I've pounded that number into your heads with a sledgehammer, and that number now is 43.34 and a quarter, and we are right at it. We came right into it yesterday. We did push through a fair amount into the 60s, but we pulled back and we are consolidating right at that number. Pay attention to this area. This is acceptance in the next balance, in the next upper distribution. We'll look at that in a minute, and that's where we stand currently. So right now, we shifted the point of control down. Well, no, the point of control 43. 43, 42, 75. The point of control is above us. It is in line with VWAP and mid. So we have VWAP, mid, and the POC all in one place. We just tested up to it. From below, and we are basically trading on the lower end of the range. This appears to be weak coming into today's session, and we may explore, and this often happens on Fed Day. We push directionally by the end of the session, and then we take a lot of that back over the next two sessions. We'll see if that statistic holds or that behavior holds for today and tomorrow. There was really good delta, positive delta yesterday right here, and the roll having been completed, we can kind of lean on that delta a little bit, the order flow a little bit. But overall, we are holding bearish so far on the upper end of yesterday's range. So that's where we stand. The delta is positive, slightly positive. It's really just sitting sideways. And if you look at the profile, it is very obviously balanced. Look at that Gaussian profile, just beautiful profile, just like you see in the textbooks. Little taper on the end, very fat in the middle, with a little taper at the bottom. The point of control right at the center. This is where your moving averages actually represent the underlying sample. When it's not this balanced, a moving average is actually a misnomer, is not representative of the sample. And so what we have here is a market that has run yesterday and is in digestion mode, and it's likely to continue to be in digestion mode into the session. That's what we want to take forward. So with that being said, I want to bring you back to what we have done here. And I'm going to do this. And by the way, we broke above the monthly, and I'll show you that in a minute on Edge Pro X. But I'm going to clean this up here. And what we've done is, again, we've got this balance zone from 4,400 to 4,271. 4,400, 4,271. Then we created this balance zone last week that's a little bit lower right here with a point of control at 4,251. 4,251, there's the MC point of control, and you can see we traded quite a bit there at 4,250. And what we did yesterday from an auction perspective is that we took that lower balance, which started at the beginning of last week through Tuesday, this box, and we have moved from the point of control, and we've moved higher 100 points from 4,250 to 4,350. And so what that's called, let me ask you, what is that called when that happens? Why is this significant? What does this mean? What does this mean when this happens? What is this saying to you? In technical auction market theory terms, market profile terms, whatever, what does this mean? Discovery, sure, it's all discovery. Yes, initiative. So we've moved from balance, and we had an initiative buying spree. We finished at the high. This is quite bullish, and now we are back in the upper bounds. We basically are rejecting the lower bounds. This is very important to remember. And so the floor beneath us is going to be this 4,300 area, brings us back into that lower bounds. We are rejecting it, moving back up. And the next key test area, since we are above in this upper balance, remember the upper balance is 4,294. 4,294 in the current contract and 4,291 are the two key balance points. Those are the two key support points right here. Let's call it the double O. Okay, so it's really imperative that they hold this double O. If the double O gets held and we continue above 43.51, then the natural thing to do, just think bigger, the natural thing to do is to push to 44.05 or the 4,400. So what this market has done is it's likely to consolidate here today, take a break. We run up a hill, we need a moment to catch our breath. That's probably going to be today, especially with expiration tomorrow. So we are likely to take a breather today, but ultimately if we start to turn back up above the 43.50, the next key place to test, if you're a swing trader or an option trader in SPY or the ES or whatever, the next key test area will be 4,400. That's what we're setting up for. But recognize we've moved from lower balance, we initiated into upper balance. We are still in balance. We're not doing anything special here. We're still fighting a wide range. I hope you get that. This is a very, very important fact. We took out the 20-day simple moving average. We remain below the 200 and the 50 and the 100, and those kind of crisscross here at 44.50, which is above the 4400. So that becomes the next 4400, then 44.50 becomes the next resistance. It's very, very systematic, very methodical, and you need to be aware of it. So let's take a look at the overall picture. This is what I was demonstrating to you. You could see the profile here is very heavy. Is very heavy down into 42.30, 42.20, and we initiated from it on a TPO basis. On a volume basis, the number is 42.50. But we've initiated out of it yesterday in this profile that shows that we had a P-shaped and we rejected these lower prices after the Fed yesterday. This bodes well for testing in this region, for being up in this region. Looking at the overview chart, look at what we did yesterday. Here, I'll show you even on the NASDAQ. Remember, I mean the YM. Remember, I'm monitoring the monthly VWAP just as a kind of it's kind of like an anchored VWAP, but I'm just using the monthly. We've remained and tested from below yesterday. We pushed through over the last few days. We pushed through, and yesterday we tested to it, and we see the same in the S&P here. We broke through over the last couple of days, and we came right back into it from above and held above. So things are turning a little bit in favor of the buyers. We have some value buyers coming in and buy the dippers and so on, and that's where we stand. Okay, I need to move on here. The market opens in a minute. There's a lot going on, but overall, what am I expecting for today? Expectations for today. Sorry. Expectations for today. Very choppy open. I'm expecting it to try to test into the prior day's VWAP, the prior day's point of control. I'm expecting it to take settlement and to take out yesterday's high. I'm expecting yesterday's high to be tested and taken, and I'm looking for it to get weak and to go sideways from there. Be careful today, in my opinion, unless news flow continues, be careful today over committing. So a test of as far down as 43.12 right here, the prior week's high testing from above. It can go as far down, but and I'm looking for the high to be done so that we can finish yesterday's auction. We finished at the highs yesterday. We take care of the high, the prior settle, and we test up, and then we're likely to go sideways. That's the primary scenario. Don't expect this day, the post FOMC day, to be super exciting. The secondary is we push up into the full session VWAP and settle, and then we get an impulse, and the market now starts to reprice balance again. And this is the better opportunity. We start to move back through the 42.60, and we really squeeze those late buyers pretty good down into the green line, which is the key support at 42.51, 52, and then we bounce back up to 43 and hold steady right here at 43 to establish consolidation, to establish a base for the next leg up to 4,400. I know that's a lot to cover. I know I'm talking a lot, but there's so much to learn from what's going on here to support your trades and support your process as a trader. The goal here is not to come in and collect ticks. The goal here is to come in, understand what the participants are doing, and to collect many, many, many points because you have a process that understands what's happening, and you're not that weak trader that's freaking out every time you put on a trade and the market starts to push against you without any meaning, getting pushed out every time and then watching the market run in your direction. The goal here is to make you a strong trader. Good luck.